a lot of parties, as mentioned before, have learned from what happened in the mid-2000s, right? I mean, when I do my rounds in London, a lot of parties now, instead of asking, do you have a good deal in Germany, they first ask me, do you have a good operating partner in Germany? So that's kind of one lesson learned. And the other thing you have to keep in mind, and I think a lot of parties don't understand it yet, it's kind of, you can buy at a good price an office building, and we deal with office buildings in the periphery around big cities, right, where there are big office markets, a lot of competition, and as opposed to the UK, you deal with office rents of 6 to 13 euros or something like that. So, which means you have to kind of focus on the cost capex side very severely, because tenants there are a lot of vacancies, tenants kind of know, they have a bit of kind of, can put pressure on you, but when it comes to TIs, I mean, we've seen situations where you pay 4 years TIs for a 5-year lease, right? So that makes it very difficult. So I think the focus here, and a lot of parties don't really focus on that, is to have a good asset manager, to have a good property manager, which is regarded for a lot of parties as a commodity in the market, but those are the people that interact with the tenants on a daily basis, right? And once you have a tenant in your building, you have to maintain that relationship and make sure that you don't lose those tenants, right? Which means if there's an issue, get it fixed. And we deal with so many properties where that is not really taken care of in a good way. And then the technical side of things, also astonishing, where somebody has a property manager that have their own agenda to a degree, because they get fees out of CapEx, TIs, they provide you with a budget, and it's usually being ticked off very quickly, instead of having a technical guy that kind of is on your side of things and can save you money there. So, I mean, yields in those markets that we deal with are much better, right? We're not talking 5-6%, we're talking kind of 8 to 10%, but we have to work those assets hard. And usually if you go into those periphery regions around the big cities, you have kind of 20 office buildings, and you will always find there are like 2-3 buildings that are fully occupied and others that are almost empty, and there's no obvious difference between those two buildings. It's just that one has a really good asset manager and the other one doesn't. So that's kind of how we see it.
Even a core property isn't self-running, so you have to be on site and you have to work on the property every day. Otherwise, you lose value. And what he was pointing out, it's most difficult in Germany to find a good performing property manager. If you have a company, it still depends on the people. It's people's business. There's no company doing business, and then no company screwing if there needs some screwing to be done. It's people. And there's a high fluctuation in those property management companies. You address to one property manager the week before, and the next week he's gone to another company. They are paid low, they have a high charge of work to do, 60, 70 hours per week. It is expected sometimes that in order to deal with the issues, they are forced to work on Saturdays as well, and it doesn't simply work. So you need to pay them in a fair manner. Otherwise, you will not get the work you require, and if you don't get the work you require, the value of your property will decrease. And the more the properties are non-core, the more the asset management is necessary, and you really have to work with the properties wherever they are.